What is going on, YouTube? Today I kind of want to dive into the basics. I want to log this on my channel. Um, I'm currently on this funded account and I am doing pretty good on it. I am up 928 on the balance. I believe I've only participated in maybe no, more than that, whatever. That's besides the point. Um, Today I kind of want to just log the two trades of the week that I had taken. These trades are pretty like high, what you want to call that? The RR, there you go. At a pretty high RR, low RR. I don't know what you call it, but I think they were like 1 to like 18, and then the other one was like 1 to 12 trades, and I kind of want to talk about them. So let me get right into it real quick. Let me just say I've been doing this shit for a while now, and I'm starting to see things differently. Not just in the markets, but in my everyday life. I think it's important to be not just being so focused on getting better technical wise or understanding the market. To really understand how everything moves, you really got to start with yourself first. I know it's a little cliche to say, but it really is like a big thing in finding success in this. I believe so. Um, and that's what I've been doing. It's not just been working on the charts, it's been working outside of the charts as well on myself and my faith with God. And I would say the Bible is really a cheat code for all of this. If everyone followed the Bible, things like greed um, wouldn't be a problem. Gluttony, I think gluttony really affects people in the mind in terms of cognitive ability. So I mean, if you just follow the things that the Bible asks you of or tells you to do, I think it's almost like a cheat code in this game. I'm not saying that there aren't other methods to being good at this. I'm just saying the Bible is a cheat code. And that would only prove later. I know it's going to be proven, but I know later I'd find a lot more success to show you guys. But as of right now, these are my little wins that I want to share with you guys, and let me get right into it. So these are two trades that I want to talk about for my funded account that we're taking live. So I have my journal positions for these markets. I believe, yes, it is August 11th is one of them. Let me go on my live section, open that up. So I had actually taken two positions, I believe, for this day. I think we had an opening range gap lower, and we continued lower off of a volume imbalance on the higher time frame. I think it was a 1 day volume imbalance or something like that. As you can see here, I was annotating my charts. Want to see price close above the consequent encroachment of this wick before moving higher to close the opening range gap. So I guess here my higher time frame bias was high. I don't know if I took a buy here. Yep, looks like I did. I took a buy here on this position. My stop was placed at the consequent encroachment of the wick, it looks like. The midpoint of this order block as well. And we got in right here above this SIBI, which is now going to be an inverse fair value gap. So see how this trade played out. We just placed a little higher. Our target was buy side liquidity up here. This is pretty relative to me. And I changed the color of the SIBI into the orange. Orange to me represents inverse fair value gaps. And we actually started respecting the bodies here. This gave me more confidence that this was going to go in my favor. The short-term high was this minor buy side liquidity. I wrote down I will move to break even once price reaches here. Now price ended up reaching there. We're at $118 profit. We move our stop up into break even or covered cost. Now we're going to come down into this. And we see that we are up $163 on this one trade. And we moved our stop into this wick right here, consequent encroachment of this wick. We moved it just right under it, at $74. So we secured profits here as we test this SIBI. Now this SIBI is going to be very important for my next setup that I'm going to show you guys, because I'm going to be using this as my next entry point for price. Now we tested that SIBI. That SIBI ends up stopping us out about here somewhere. You can see how I wrote right here. We got stopped out while taking a shit. Yes, I was taking a shit. So yeah. Boom, we test SIBI. SIBI pushes us lower, create these buy side liquidities, minor buy side, whatever you want to call it. Relative, it's relative. Boom, 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 boom. I don't know if you want to count it down, but you know, all we need is 2 relative equal highs. So we had just taken a high, it looks like here. So I'm not sure if this was a high that I highlighted, or maybe not. Relative equal high. So yeah, I guess this was a high that we had taken here. I'm not sure which high it was. It could have been this one. No, it wouldn't have been that one, dude. Bang. Was it here? Yeah, it might have been here. Well, we got time. Let's dive into the chart. So this is August 11th. See if I can recall this trade here. It's August 14th right now. I'm just doing some review. It's 1:20 a.m. in the morning. I'm not trading tomorrow. Reason for that is I just don't feel it, guys. I gotta go in the 1 minute. I can't go in the replay, whatever. So let's do 10 a.m. So 10 a.m. This is that SIBI. This is that big SIBI that I'm showing you guys here. This one right here. Big SIBI, big SIBI. Bang. Let me see that. Yep. There she is. Okay, I found it. Boom. This is that buy side liquidity I was telling you guys about right here. See this buy side liquidity? It's relative right here. So I was assuming price might come back and run up these buy sides. So this is what I was watching. It does end up coming up, creates these buy side. Remember, it stops me out here at this wick. I forgot what wick was it. It was one of these wicks. I believe it was this one here. Stops me out somewhere around here. Yep, it was that wick there. Stops me out here. Come down into it, and we're coming back up inside of the 1050 macro. You see this 1050 macro? That's that 20-minute interval per hour. So 1050 to 1110 is the only time we are permitted to take trades. That goes for 1010. So if we were gonna trade 10 a.m. silver bullets, we would only trade in this pocket of price. There are times where it makes it permissible to trade outside of these areas. You just have to know what you're doing. I'm humble enough to admit that I sometimes do not recognize those times, so I will not always take those even though they look nice. But needless to say, this is all you really need to trade inside of these pockets here. Now, I'll go back to here. So this buy side liquidity gets taken here, right? So I learned this from ICT that these levels of price, old highs that were taken, can be used as key levels for price to return to later. They almost act as mitigation blocks where price will go past those areas and return and then go higher, right? Well, price will come down, break through this area here, we sweep this high, we come down, and we use that as a key level. So whenever we take a high like this and we trade back under it, I like to turn these into key levels. This is a key level to me. I had this on my chart during the trading session, right here. You can see it here. And this was the position. It was $17. That was the risk for one contract, one micro. This was the risk that I took there, $17 risk, nothing crazy. But the thought process was that this order block was going to hold. It was going to form and hold price under this, right? So I was anticipating a displacement lower under this order block. Um, this is really like a good example of anticipatory trading. I'm assuming what the candles are going to look like before they even come out. And I'm assuming a PD array being respected before it's even made. So instead of waiting for the display, what the fuck? Dude, I had it all set up. Fucking shit, man. It's gonna make this video fucking longer than it has to be. Okay. Boom, so we come back here. So instead of waiting for this displacement here to confirm that this is valid, I anticipated a displacement coming under this way before it even showed me, right? Because we're taught to wait for a confirmation or wait for a displacement here, and then we want to see price trade back up into it, right? That's what pretty much the logistics of ICT trading is. But ICT also teaches us at a little more advanced levels to anticipate price, and he even throws a lot of hints that tell you to anticipate these PD arrays, but I believe that's a little more complicated, and that's something that comes to you as you go. I don't think he can really teach that. That's one of my theories for why he doesn't really dive into this type of thing, but he says it a lot. Like he kind of tries to teach to the broader audience, and if you really put the time into it, you can kind of pick up on what he's saying and the things he says later on in your trading career. I'm not saying I'm the best trader or nothing like that, but it is important um, to really understand these things, understand the things he's saying, understand lectures, all this. Um, so yeah, I anticipated this displacement under. I anticipated this order block being an anchor in price for price to respect. What made me have confluence in this was price respecting that key level to the tick, as you can see here. Not a single dime higher, not a single dime lower. Perfect on the dot, right? So this gave me the confidence to say that this was going to hold and price was going to stay under this, right? And looking at this now, we can even see this little baby wick being respected by price here as well, if that's how you want to see it. But this key level, right, was the tip that I got from the market, and I use that to build confluence off of this position holding, right? So that is how I entered this position here. I placed my order here. I placed my stop at the high of that key level. And the rest is history. We started moving down. Since we moved down into this volume imbalance, I moved to covered cost or break even, because if I was wrong, price was going to react here and go higher and take these relative equal highs, right? Obviously, I was betting for this minor sell side liquidity here and this sell side liquidity down here. Um, but the risk was only $17. And we had that displacement. We're already up 54. We can take, and that would have been a nice RR, right? But no, we took it even further and let it run. We even added a couple positions, I believe, on this one. I'm not sure if it was this one or a different position. Doesn't look like it. Yeah, it was this position here. But yeah, you see, this one ended up reaching all the way down to the target here. Um, yeah, we literally reached our final TP right there. That's pretty cool. Um, so yeah, $17 risk. I believe I took profit at, where did I write it down? I hope I wrote it down. 248. 248. Stop placement here. I'm not gonna lie, I think it was 348. Yeah, it was 348. Because profits for the day was only three. Now it's 434. Yeah, it was like $348. So this wasn't the last stop placement I moved. I think the last stop placement I had moved it to was like right here, or the high of this wick. right here. So right here at this order block somewhere. Where's that order block at? I guess it won't show here, but yeah, I had moved it to this order block here. So I had 348 profit. So $17 risk, $348 of profit. Damn, this fucking website's fucking buggy, dude. If you're not on the page. So that's trade number one that I want to talk about. There is one more of these golden trades. I mean, mind you, this was $17 risk for a $348 profit. I don't know if you can ask better of that from the market. Eventually I want to do something where it gets to the tick and you're only risking 1 point, right? That's gonna take some like fucking market wizard activities to do, but this is my good win. This is this was solid for me. So I'm gonna move on to my next one. So my next one's going to be August 12th, 2026. We're gonna go into the live. So I'm not sure if I took two positions this day. Um, Regardless, we're gonna get into it here. So I guess my first screenshot, I was writing the trade. All right, you take this minor sell side liquidity, we take it here, and I guess I'm anticipating inversion for rally gap being respected here into this minor sell side liquidity. Obviously, when I place my TP, I like to place it at the fucking bottom as much as I can. And just so you know, this is the PM session of trading. So from 1:30 p.m. New York time all the way to 4 p.m., I am looking for a setup. And I get into one at 2:50 p.m. at the 3 p.m. macro, right? So I'm anticipating this inverse for value gap to be respected going into the macro. So like I said before, guys, at 2:50 p.m. through 3:10 p.m. would be the macro that you trade inside of. There are often times where you can find pockets of price where you can trade outside of those ranges. As I said before, I am not comfortable doing so, but in this case, I was anticipating this inversion fair value gap to be used within the macro 250 to 310. So we actually got an early in case price left from here and moved fast because this is all very relative. You see relative equal lows here, you see relative equal lows here, you see relative equal lows here. So I got in here and we end up displacing as we get into the macro. 2:56 p.m. This is where we're at. I wrote here, premature entry going into the macro, anticipating price structure, respecting inverse fair value gap here into the macro. The risk was $22 for this trade. Now, at this point, I'm already up $23. And I'm also using a key level here as well. So this also helped me have some confidence in this trade. We had just taken that high right here. We come in here, we respect it there. Not to the tick like the last trade, but it's still something, right? The bodies are respecting this area. We come lower and we have this inverse fair value gap here, okay? Now we displace lower and we are in this position. Now, I move it to cover costs here. Now this trade is a free trade. We come down here and we see that we are forming sell side slash whatever the fuck buy side inefficiencies. I forgot what they're called, but I like to call them civvies. They're basically premium fair value gaps. A premium fair value gap is just a fair value gap going down. So I like to highlight those as red, and then you'll see me do the discount fair value gaps as green. Discount being green fair value gaps, like one right here. This one would be green for me. Since it's black or red, I make the fair value gap red. Now we're gonna go up. I added another position here because I like the position that I was in, and since I had moved it to break even earlier and I added another contract, now we're risking $30 again. So now we're risking profits. We're at $29 here, and I'm anticipating the price to respect this level and to continue down further because we have all this sell side liquidity resting down here. So I added a position here. We end up touching that civvy, and then it continues lower into a new buy side liquidity level here, right? Minor sell side liquidity, right? This becomes a key level because we traded right back under it. And under this key level, I am anticipating that price remains. And it kind of trades above it, right? So it didn't really do much, that key level. but price still respected that area. It never touched my covered costs. It never touched my break even, and we continue lower. Now, I was looking at these two wicks here. We have a wick here and a wick here, and I was seeing which one gets violated first. Say this one gets violated first, right? Instead of this one getting violated first, I would have assumed this trade is a dud, right? But since this wick got violated first, we were able to stay within the trade, no problem, right? This is what we want to see. We want to see the lower wick getting violated. And it violated with a SIBI displacement lower, right? And then I put a partial here since I was in two contracts. I don't really trade two contracts on this funded. I try to remain to one, but this setup was just giving it to me, right? Only give what the market offers. So I was getting teased here a little bit. See me writing it down, teasing, it came right here, went back up, came down here, and not trying to do it. And then did all this shit, straight teasing me. Market was being very naughty and shit. So I actually put a limit sell order here in case it wanted to come back up, leave this relative. If it didn't want to take this right now, I was okay with that. I wasn't going to force an exit. And I was just going to add another position here if it came back into the SIBI. It didn't though. It ended up taking my partial right there. And market closed. And that was it. Market closed right there, and that was fucking it. Yeah. So since market closed right there, that was pretty much the end of that point of that position actually, because I think it had to close at like 350 to 4. So at 350 to 4 it closed. I mean, the fucking market closed at 4, right? Yeah. So yeah, bro. Yeah, it's pretty burnt. So I'm off this shit. But those are the two that I wanted to go over and shit. So there you go.